Here are the 3 areas you want to target if you're looking to improve your trading. Hey guys, welcome back to another video, week 5 of our Trading in 2021 journey. I don't think I've done this year actually, but if you guys are new to the channel, thank you for subscribing, thank you for finding it. My name is Akil Stokes. I am a former struggling trader turned consistently profitable trader. Did a little money management in the middle there as well. I am also the co-founder of Tier1Trading.com, and this is a weekly video that I do providing you insight on the best opportunities that are on my radar for the week ahead, and also to come in and give you little weekly hints and tips and lessons that will help you become a better trader. My philosophy is that the charts are important. You do need to know the skill of technical analysis, and that's what I look to help you out with during the technical aspect of the video, but that is only a small piece of the puzzle. And there are so many traders that are lost because they fall for the just find the strategy or just find this and it'll be okay, and they end up wasting a lot of time and a lot of money like yours truly. So something I want to do this year is really document my journey. We do this day in and day out with the traders on the platform. They get to see all aspects of trading. They get to see the good, the bad, and the ugly. And one of the best pieces of feedback that we get is that seeing that is so valuable, because everything else on the internet is just the good, and they get that expectation, and when the hard parts come in trading, they're not really equipped to handle it. So hopefully through this trading journey video, you can see the good, the bad, and the ugly of trading and just have a realistic view of what it looks like. Now, so far it's only been the good. 2 more trades this past week, so it's been a very slow week, but nailed them, so 2 for 2. That brings the equity curve up into a double-digit return for the year, which is good. And of course, the win percentage is still trading highly above what I think I should be at, but again, we're just padding the cushion for that drawdown to come, and when it comes, we're going to walk through it together. Now, what I wanted to talk about today are really the 3 areas of trading that you should aim for when you're looking to improve. And this stems off a conversation we had this week in the live room about 1% change. I guess to back it up, one of the philosophies really early in my trading days, right? The first thing I got, the first real educational investment that I made was this trading DVD, right? Me and my trading partner at the time, we went halfsies on it. We bought this DVD, we watched it, and it was supposed to teach us all this cool stuff, and we were gonna be expert traders, right? Didn't work out. Not saying what was in the DVD wasn't valuable. At the time, again, we were just searching for strategies, and it was teaching us more about how to trade and the other stuff that we didn't really care about or put work into. So it was probably our fault. But one of the things that stood out to me with that DVD was a section where they talked a little bit about philosophy, and they brought up something called the Kaizen philosophy, which is a Japanese philosophy for continuous improvement. And basically it says that the goal is to get a little bit better each day, and if you can consistently get a little bit better each day, you're going to be massively more efficient in the future. And that's very similar to the power of 1% change. If you have time, maybe you can actually physically do this if you're on your phone, or if you're watching on TV, maybe do it later. But a really good trick, if you want to just get a visual, hands-on feel for the power of 1% change, is this, right? Put a mark, a starting point, find a wall or someplace outside, and just walk 10 paces forward, right? Walk 10 paces forward and put a pebble or something where you ended up, right? Now go back to that original mark, shift yourself just 1 degree to the right or to the left, walk those same paces forward, and you're going to see that you're in a completely different location, right? Now, imagine doing this, right? Imagine each step is a day and you're consistently taking a step each and every day, right? By the time a week ends, by the time a month ends, by the time a quarter, by the time a year ends, by the time 5 years end, you're going to be in a completely different place. And if you're doing things the right way, you're going to be in a completely different place for the positive. And trading is the same way. When we want to become better at trading, so this is kind of the second aspect of trading. Once you have a system, well, actually, I guess you could do the same thing for learning how to trade. But we're gonna talk, I guess, about once you already have a system in place. The idea is to become more efficient as a trader, and there's 3 areas you can improve on. Now, understand that when we say become more efficient, it's not going to be like by a drastic measure, but small little steps over time. So the areas we want to focus on are the same three areas that we need before we ever take a trade, right? Entries, stops, and targets. If you're brand new, those are the three things we need before we can ever take a trade. We need to know where our entry is going to be at and how we're going to enter. We need to know where our stops are going to be at. We need to know where our targets are going to be at, right? If we don't have that information, we can't see what our risk is. We can't set up our position size, and we can't see if it's a trade that we want to take, right? Those are the same three aspects we really want to focus on when looking to approve. And we'll start with stops, right? So stop loss, that's when we know we're wrong. Stop losses are interesting because it's that kind of that buffer zone between, yeah, we want to stop loss as tight as possible. We want to know when we're wrong and be out of the trade as soon as possible. But we also want to make sure we leave a little bit of a buffer so that we don't have stops in dumb places, right? A lot of rookie traders get into trouble because they put stops like 1 pip below the low, or they put it right at like a psychological number that sounds good, and smart money stops them out and goes off on its way, and they complain, right? We got to be smarter than that. But we also can't put our stop loss, or we don't want to put our stop loss a million pips away, because now when we lose, we're going to take more of a loss, right? And the goal is we want to keep our losses small. Targets are the same way. How can we become more productive with targets? Now, becoming more productive with targets doesn't necessarily mean shooting for larger targets, right? We do kind of want to work on that maximum favorable excursion, meaning how can we get the most out of each trade, but we also want to be more efficient. A big problem many traders have is that they are good in predicting the market direction, they're good at getting involved in all that fun stuff, but they overshoot their targets, meaning they try to get too much out of the market, and the market ends up going their way and then reversing before it gets to their target area, right? I'm sure many of you guys watching that have been there, where you're like, man, I was right, the market did what I thought, but it didn't go to the area that I actually needed to in order for me to make money, and that's a problem. So it could be one or two things when you're in targets. It could be increasing targets, working on maximum favorable excursions. How can I get a little bit more out of it? Or how can I be more efficient? How can I get better at target placement, whether it's a wick or a body or a certain zone within structure? And that's something that we're going to talk about when we hit the charts today. The next is entries, right? And this is where I'm currently at in my trading, in a sense, is how can we become better with entries? And again, better, it doesn't necessarily mean let's put it this way. You want to increase your win percentage, right? You want to get more sniper-like in your entries, but that doesn't necessarily mean that you're going to see massive increases, right? Your system is what it is, right? I did a few podcasts over the last few weeks about back testing and results and viewing them as kind of like bands, right? Standard deviation, where your win percentage is going to range between 60% and 50%, right? And if you're someone that's working on becoming more efficient with your trading, your aim should be to how can I stay closer to that 60% mark versus that 50% mark. The expectation shouldn't be that all of a sudden you're going to go from a 50% trader to an 80% trader. That's just not within the realm of what your strategy can produce. So it's an unrealistic expectation. For me personally, in my journey, I'm working on becoming more aggressive with entry. This is something that I've done over the years, right? Lots of years, right? My journey started like this. When I first started trading a very long time ago, apologize, you're gonna hear dogs in the background. My neighbor lets them out around this time. When I first started trading years ago, I was very aggressive. I was like many of you, trading, gambling, quality or quantity over quality. I just had to get as many trades as I can and frequency and all that fun stuff. And I lost a lot of money. Once I got educated, I went to the polar opposite, right? I went from super aggressive, just pushing buttons and buying, selling everywhere, to super conservative. I traded something called the CTS, Combined Technical Scoring System, where we grade ourselves on the different elements that we see in the market. And I remember that I needed like everything in the world to combine or to align in order to take a trade. In fact, I just spoke to a trader the other day who's very similar. He's like, man, I went through my analysis. I got 5 trades a year. Is that okay? I'm like, well, look, if that's what your system gave you, that's what it gave you. And he's very precise about where he wants to enter. So I went from super aggressive to super conservative. And now I'm kind of blending the two, where I'm becoming more and more aggressive. And this is still a work in progress, but I'm becoming more and more aggressive at my best trades, and kind of leaving aside more conservative, I guess, with my worst trades, right? So doing this for 13 years, right, I'm understanding what are my best setups, and I'm saying to myself, Akil, when I get my best setups, my grade A setups, I want to be super aggressive about getting involved in them, because those are the ones I don't want to miss. Those are the ones that don't come up too often. However, I don't want to take the worst setups, or if I do have a worse setup, I want to be really conservative about getting involved in it, meaning that I either need an amazing risk reward, or I want to wait for more and more confirmation that what I think is likely to happen will happen. So it's combining the two. So when you're at the point where, the 1% change is valuable for everyone, whether you're actively trading, whether you're learning how to trade, right? Try to become 1% better each day in your journey. But for you guys that are already successful, and I know there's a lot of you guys watching the channel here, and obviously a lot of you guys over on the Tier 1 platform as well, that's the next step, right? You don't have to drastically switch up what you're doing, but you want to become a little bit better at what you're doing, and that's going to be key. So that's today's lesson. Now, before we hit the charts, I want to give you guys a heads up. We have a 4-day workshop coming up soon, Emergence 2021. It's going to be starting on February 15th and running through the 18th. If you guys are brand new, this is something that we do each and every year. Back in 2017, we started Tier 1 Trading. We put the business together in 6 weeks. In early 2018, we decided to announce ourselves to the world by hosting a workshop called Emergence. And we looked at it as a fresh start for us as a company. And the value that we provided for you guys was going to allow you to have a fresh start in your trading for the year to come. The feedback was so amazing that we decided to make it an annual event, and this year's is coming up, so you don't want to miss it. I'll put a link to register in the description box below, but before we hop into the charts, enjoy this brief video for Jason Graystone explaining why this event is going to be so powerful.
There was a period of time in my wealth creation journey where I was in business and I was extremely frustrated, but I was about to crack one of the most difficult skills in the financial world, and that's trading. My success in trading then allowed me to completely be financially free. It was the final piece in the puzzle that I needed that allowed me to not only escape my business, but accelerated my wealth to the point of massively upscaling my lifestyle. I moved my family into incredible dream homes, traveled the world in style. It allowed me to be 100% mobile and live an extraordinary life. There was a moment which was a paradigm shift. I remember sitting at a bar in the middle of the Indian Ocean, checking a couple of trades and pulling out enough profit on those 2 trades to cover the entire trip, plus pay for upgraded seats on the flight home. When COVID-19 devastated the world, I remained 100% unaffected because of the skills and the knowledge that I'd gained in trading. Since then, I've been able to generate wealth and add to my liquidity system in a way that is more liberating than any other wealth vehicle I've ever seen before. I've experienced multiple 6-figure days where my trading has taken me a maximum of a couple of hours. There's also been many times over the years where I've been able to pull out the average annual salary out of the markets in minutes. In the process, I've learned how to master my emotions and become a master of risk management. I've dissolved fear, greed, worry, and on top of that, I've been able to fit trading into my life so it flows effortlessly with my personality, my liquidity system, and my lifestyle. On top of all of this, the work that we've been doing with traders over the years has been recognized by the likes of Forbes magazine, and as a result, I've been able to talk on some of the biggest investing stages across the world. Each and every year, we host this flagship event that's been responsible for guiding thousands of traders into the markets the right way, giving them the skills and the knowledge that they need to take their trading further. With all the craziness that's going on in the markets right now, there's 2 types of people. There's the players who are in the driving seat, the professionals, and there's the people being played. If you've ever given trading a thought or been interested in getting into trading, make sure that you register for this free event, and I promise you, you won't be disappointed. I'm going to be explaining technical analysis, platforms, psychology, mindset, and most of all, how to accelerate your wealth in what I've found to be the most extraordinary acceleration vehicle I've ever known. It's going to be eye-opening, it's going to be technical, but if you're ready to listen, then myself and the other mentors at Tier 1 are ready to teach. So if you're ready, prepare for emergence. I'll see you at the event.
So we're going to get started this week on the Canada yen, and we're actually going to be on a weekly chart, which is a higher time frame for me. Typically, you don't see me look too much past the daily, but sometimes when you have longer or higher time frame trading opportunities and you need a little bit more perspective on the market, I will bounce out to the weekly to kind of get a bird's eye view at the lay of the land. And we're going to start here by practicing reading a price chart. And this is something we're going to go over at next week's emergence, or next week, the week after next week, the 15th, whenever we start, the emergence workshop. We're going to go over how to read a price chart. We're probably also going to go over higher high, higher close, lower low, lower close principles. So for you guys that are on YouTube that are maybe new and haven't heard the lessons on that before, you're going to kind of get a head start. So you can kind of show off once we get to the workshop. But let's take a look at what has recently happened here on the Canada yen. And by recently, I mean within the last 2 years, right? We've had a major spike to the downside. Right? We've kind of consolidated between that zone. We moved up for a double top, right? This was early 2020. We sunk down, dove down, crashed down after that, and we spent the rest of the year trying to make up for it. And on that way up, you can see that price action has consistently come to really a halt at a very particular level of structure. This is going to be a level of structure resistance. And what's interesting about this level is this is a level that we tend to call a structure swap. Not tend to call, we do call it a structure swap. And the structure swap is a level where we have both resistance and support on either side. So you can see if we look back here, we have resistance, resistance, resistance. Before that, it was support, support. Even before that, looking left, you have more resistance, you have more support, right? We hit this level numerous times, so it's no surprise that there's a battle. So what's important, or why I wanted to look at this chart, is because we've recently broken out of that level, right? We've hit resistance again past June, past September, past December. We consolidated it for the beginning of this year, and we finally got a higher high, higher close. And knowing my rules on price action and how I read a price chart and what I look at and what that causes me to predict, having that higher high, higher close, that violation of structure, allows me to make the prediction that price is likely to go higher. And if we're likely to go higher, the next question I want to ask myself is, where are we likely to go to? And for me, it would be a retest of this double top. Now, we're going to go down to a daily. I'm going to show you guys a little bit of not a trick, but something I haven't talked about in a while, right? So we use a few indicators here at Tier 1 Trading. We have the VS1, which is a visual structure indicator. We have something called Enigma as well, which is a pattern recognition software. You don't hear me talk about those a lot because I'm a big fan of doing manual analysis, and we think of those tools as being supportive. So, it's not one of those deals where we're encouraging our traders to come into the platform and just click and plug in the tool and do whatever the tool tells you to do. It's no, learn how to read price first. Use that tool as a supportive resource to help you with that learning curve. To kind of have like a teacher looking over your shoulder saying, oh yeah, this is right. Oh yeah, no, that was wrong. And then once you get good at using it or identifying whatever you need to identify on your own, again, that tool becomes a support. It becomes an extra eye and an extra safety in the market for you to use, right? So what I'm going to do here is I'm going to bring on our VS1 level, which is going to tell us or show us some visual support and resistance. And I'm going to change it to the weekly. And you'll see that it's going to show me where our weekly zone of structure is, right? You can see that red dot, or not the red dot, the red box. It's a Friday night late. It's been a long week. My kid had a sleepover with me yesterday. He went to sleep in the bed, and he turns and he kicks and he screams, and he had the time of his life. He woke up so excited. Best night ever, Dad. I got like 2 hours of sleep, so I'm on E right now. But you can see the red box on the top of your screen, right? So that is going to represent the weekly level of structure. If we zoom out, it's that big kind of zone that we talked about on the weekly chart. Now, here's the cool thing, and I haven't talked to you guys about this. I've mentioned it in the live room from time to time, but I really haven't talked about it. But when we first started introducing these levels of structure, when we gave it to our traders just as kind of a way to help with the charts, right? We had a lot of structured traders. It was like, hey, we like developing tools that will help with what you're already doing, kind of, again, decrease that time, right? Trading is all about decreasing time in the market. That way you can use it on other things that are better in life. And what our traders started doing is, because at this time it was a mastermind group, so we had some of the smartest minds in the industry working together, they started developing strategies based off these zones. And one of those strategies that they used was this, right? So they would take a higher time frame VS1, and then they would add a secondary one. Again, I'm gonna go down here so you guys can see it. They would add a secondary one based off their trading time frame. So in this example, we're gonna use the daily, right? So we have a weekly one, we have a daily one. And then what they would do is they would look for the level in which they overlap, right? So you have your weekly one that comes all the way down from 82, 83s. You have your daily one that really looks at the upper end, right, of this this double top and gives you an overlap right here at 81 or 84.21s. So I don't think I mentioned this earlier because I just, again, my brain's kind of melted, but we're predicting that price is likely to go higher. If we're predicting that price is likely to go higher, I'm expecting it to go somewhere near this 84 even handle, right? That's just based off my ability of reading structure. Putting these VS1s on basically confirms what I was thinking. We're aiming for that mesh point where we have room to go from 82.50s up to, again, 84.20s. I'd still be a little bit safe and aim for 84s. Or if we retrace back down from 82s or anywhere below, if you're a pullback trader, back up to that 84 level. And again, we're looking at almost 150 to 200, maybe 250 pips of profit potential in this trade. So what's cool about this is, right, we talked about the power of 1% change. And again, I'm very good at reading a price chart. I'm very good at identifying what points to take targets at just with my own eyes. But I didn't always start like that, right? I wasn't that good at first. This is 13 years in the making, right? So if you're a newer trader, especially for you guys on the platform, if you're a trial member, because you get access to this as well for your 2 weeks if you're a trial member, or if you're a premium member, right? This may be something you want to use as maybe not necessarily confirmation, but just as assistance, right? So as you're training your eyes and saying, okay, I want to shoot for this level or that level, throw that VS1 or that double VS1 on afterwards and see if it confirms what you were thinking. You may even want to use it as part of your CTS, right? Where you're throwing in your fibs, you look for your even handle numbers, maybe throw out that VS1. If you have VS1 confirmation, boom, that's another point or another 2 points to your combined technical score, right? There's plenty of ways you can use it. But if you're someone that finds themselves maybe struggling with maybe not necessarily where to identify support and resistance at, but what specific point within those zones to aim for target taking, this can certainly help. And it doesn't have to be something that you use forever. It could be something that you use until you train your eyes and you get a feel and you develop that experience. But again, going on the theme of 1% change, trying to get a little bit better, I certainly think it's worth a try. So awesome opportunity here on Canada Yen. Again, 82.50s. I'm a pullback trader, so I'm going to look for the pullback here. I don't trade this pair personally, but that's what we'll be looking at with our traders is pullback opportunities. But however you want to get involved, if it's a breakout as well, you've got one right here. I think we can go up to 84s, which is plenty of opportunity for a bull trader to take advantage of. So the next pair we're going to take a look at is going to be the Aussie Canada. This is going to be short and sweet. This is a potential advanced pattern formation, and more specifically, this is going to be a potential bearish bat pattern. Patterns have been on a roll for me this year. 85% of the trades taken this year so far for me have been patterns trades, and they're advanced pattern trades, and they're off to a very good start. The bulk of them have been Gartleys. I've taken 10 Gartleys. Next has been bats. Strangely enough, ciphers is the lowest one, which is typically the pattern that you most frequently see in the market. But
but it is what it is. So we have another advanced pattern formation here on the Aussie Canada. Let me draw it out for you. I'm going to use another one of our softwares here, and we're going to start with our X leg, right? So this is our swing high to swing low. This is going to be an impulse leg. It is a clear as day, sore thumb, swing high to swing low. It breaks structure looking left. This should be one that 100 out of 100 traders agree on, right? With, people like pattern trading because it's very rules based. It's black or white. It's very hard to mess up. That's why I flocked to patterns when I first started turning my trading around, because I was really, really bad. I was making a lot of mistakes. I didn't trust my eyes to see anything. So I needed something that was essentially dummy proof. With that being said, the difficult part is, or not the difficult part, but the part you still have to work on is reading a price chart. So many traders think, oh, it's patterns, it's easy. I can just come in and draw some fibs and some lines and it's black and white. I'll be good at it. No, you have to learn how to read a price chart. You have to understand how to read new structure lows, outside returns, all of the boring stuff that we teach in our entry-level courses that don't seem like it has any relevance to you making profit right away, right? It doesn't. You won't make profits right away. But if you're going to do anything in the long term, you have to know how to read price. Trust me. So if you can't do that, you're not going to be able to identify correct impulse and anchor legs. By the way, speaking of that, we have a cool Monday Q&A session coming up for you guys. I got one of our traders sent me about, it had to be about 20 charts of ciphers. I love that he's doing the work. It is amazing. But he's got lots of questions there about, is this a retracement? Is this a correct impulse leg? What if this happens? What if we do that? So that's going to be one of our topics for Monday's Q&A, along with journaling and whatever else comes in during the weekend. So that's going to be a pretty cool one, especially if you are a pattern trader that has questions about, are legs relevant and are legs not relevant? But this leg is completely relevant. This is our X to A. Our A to B, I think I froze my thing up. Oops, there we go. Our A to B is going to be right here. You can see it comes to a 50% retracement. So we have a bat pattern on alert. We get our C completion right here for our C leg. And we are working our way up for our D completion. We just need to come a little bit higher because the bat has that deep D completion. And if we get that, we're going to have a D completion up at 98.12 with, of course, the zone going back to our previous X leg. So that purple box you see in front of you, that is the zone. Once it hits the bottom of that zone, it is technically valid, or completed. Once if it breaks the top of that zone, it is technically invalid, and you probably don't want to be involved with it. So not perfect, but a pretty textbook potential bearish bat here on Aussie Canada for you pattern traders. Check it out. Make sure those orders are set on the open.